Good morning. Welcome to Stock Market Today. It's Tuesday, January 12th, 2021. This is your host, Dan Russo, Chief Market Strategist at Chaikin Analytics. Find me on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email. I get a lot of the content from this show, daily stock ideas for you to consider. Hits your inbox every trading day before the market opens. So U.S. equities were lower in Wednesday's trading after major indices posted a solid start to the year in the first week last week. Comm services weighed down by social media. Consumer discretionary was weighed down by Amazon, Tesla, as well as hotels and cruise lines. Those were the two lagging sectors. Healthcare beat the tape and energy was the best sector once again. Treasuries were mostly weaker after last week's steepening that pushed the 10-year yield past the 1% mark. Everybody talking about rising rates today. Dollar was better on the major crosses. Gold finished up 80 basis points after a huge drop last week. WTI crude was little changed at the close of trading. And as we get to the desk this morning, S&P futures are up 20 basis points after Asian markets were mixed overnight. China, Hong Kong were the best performers. Japan, solid gains. South Korea was under pressure. European markets are mixed this morning. Treasuries are mostly weaker once again. Dollar is little changed against the yen and euro. Gold is up 50 bips and WTI crude is up 1.4%. I think you want to start getting used to the word inflation. Looking at the major indices across the trend perspective, just a pause in the rally here. SPY still has support at 360, then 340. Above 340, we're playing for 413. You know the drill. The roadmap has not changed. 260 key support for the Qs. 300 is the level that we really care about in the near term. So far, so good. Bumping up. IWM support near 190. Then in the 160 to 170 range. Trend is up until proven otherwise. As I've been saying for the past few days, I really would like to say something different. I wish there was a reason to say something different, but there's not. So we're not going to. The trend is up. You want to be on the right side of it. I still see, for all the talk about frothy sentiment and this is going to be the top, there are way too many top callers, in my opinion, for this to be the top. Now, that could be wrong. I'm just kind of riffing here on the dialogue. And, there are a lot of people who I think who've just gotten it wrong. They've missed it. Their frameworks and their mental models were not where they needed to be. They got too caught up in the news of the year. And then, after they missed it, now they have to justify missing it by talking about how valuations are stretched, by talking about how it's a bubble, by talking about how only 5 stocks led the market higher, right? And, that's a complete lie, that last point. Maybe it is a bubble. Okay. Valuations are stretched. Sure, no one's going to argue with that, but who's to say they can't stretch further? And valuation's never a catalyst. You see it in things like crypto also. Plenty of people who missed it, like literally just missed it, couldn't see the chart right in front of their faces. Completely missed it, didn't believe it, so now they have to bash it. If you're on social media, quite a few people like that. I don't understand it, but the simple fact of the matter is you want those people out there because when they capitulate, when they get in, when the person who told you the entire way up that the S&P was expensive, and then, up 30% further from here, they buy, that's when you want to pay attention. Other than that, the roadmap remains in place. Let the trends dictate, and then within the framework of those trends, find what's working. Let's hit our market in a minute. What are we writing about today? Stocks pause in the rally, but the trend remains higher. I think we just made that point abundantly clear. What's amazing to me, too, is that while you could kind of justify yesterday being a little bit of a risk-off day, right? Especially with the Nas down 1.5%. Bitcoin was down over 20%, 25% from its Friday high at one point. So let's certainly call it a risk-off day. But even in a risk-off day, your havens, long-term bonds, even gold, didn't catch too much of a bid. Kind of interesting, right? So if you thought you want to be a top caller, when the risk trade rolls over for a day or even a weekend, in the case of crypto, you'd expect to see your havens catch a bid, and they didn't. Bonds are still under pressure. Gold was up a little bit yesterday, but didn't In the face of Bitcoin being down 25%, you would have expected gold to be up a lot more. It wasn't. So havens don't catch a bid. Tech is near an inflection point. We'll look at that. Bond proxies continue to lag the Brogger tape. I'm beating that horse pretty hard, but I'm going to continue to. Those are decade lows we're going to take a look at. Futures point to a higher open today. Getting back to the indices now from a power bar perspective. 6-2 bulls to bears on the Dow after losing 30 bips. S&P down 70 basis points, still solid. Nas, your underperformer, 20-14. Small caps outperformed in a down tape. Right, they were down, but just down less. That's outperformance. Bonds down, take energy. Once again, your better group. And check this out. Energy has 3 bulls, 0 bears. Kind of interesting. We'll take a closer look at that a little bit because I had a bit of a glitch that we'll get into. Let's chat stock of the day. So what I did was I looked back over the past 6 months and I wanted to identify the sectors that have outperformed the S&P over the past 6 months. There were 5. Materials, fins, industrials, your cyclical groups I've been talking about. Tech and discretionary, your secular leaders. So kind of a wide way to look at it. And then I just said, look, give me the very bullish and bullish stocks within those sectors, right? So we use those sectors as a starting universe, and we start with 298 names. Drill down, give me the ones that are very bullish in the Chaikin model. We get 85 names. Give me the ones with strong money flow, 44 names. Give me the ones with strong relative strength. We get down to 38 names that I think are compelling. Should we get a near-term pullback into oversold position for the market, I think you want to take a look at these names. And what's interesting is some themes are here, right? Freeport-McMoran, that's your inflation, that's your base metal theme, right? Rising rates, you're going to see a lot of banks and financials in here. That's your rising rate theme. Secular growers like in the software space, like Intuit and Synopsys, right? That theme's still very much intact. Cadence, I would throw in there as well. You have your reflation trade. MLM is the type of name that should do well with infrastructure spending under a Biden presidency. You've heard me talk about the ag theme. Well, if you don't own Mosaic and Corteva by now, then you've heard me talk about the ag theme, but you took no action on it because those are probably 2 of the better stocks to have played it over the past, 4 to 6 months that I've been sitting here pounding my desk about this theme. Same goes for John Deere. John Deere may be a little extended in the near term, but you get the point. Is this disciplined approach, identify the theme, stay on the right side of the trend, and a simple screen, 3 clicks of the mouse gets us 38 names that are compelling in and around those themes. Pretty fascinating. It's in my note today. It's here for you as well. Taking a look at our sector tracker now, and I had a little glitch on the industry focus, so we're going to have to improvise here a little bit. Sector tracker moving the last 5 days. Not a ton has changed. We have our cyclicals up here, energy, materials, fins, healthcare, discretionary rate. So a lot, no real change from what we discussed yesterday, other than utilities bumped up a bit as comms came down. Now, comms came down because, group just got destroyed yesterday, Twitter, Facebook. You want to, you deplatform a sitting president, regardless of what you think. You deplatform the sitting president, investors take notice and they take a chunk out of your stock. Staples REITs are defensive groups that are lower over the past 5 days. So since I couldn't upload the industry, I figured we would just take a look at energy, right? It's at the top of the list. We've been talking about it. Now the group is neutral. Now remember, neutral is interesting. Why? Because for 2 years, it's been pretty much bearish. Now we're neutral and we're starting to outperform. And look at the intensity of outperformance picking up. And I would urge you to take a look at a name perhaps like Exxon Mobil, which is exhibiting a personality change, XOM. Group is exhibiting a personality change. Individual names within the group flashing a personality change as well. The trend is strong here. Had to improvise a little bit, wanted to show you a chart. This is what a potential turnaround looks like with a personality change intact. Now, instead of an industry in focus, every day in my note to clients, I highlight an ETF that I think is interesting. Whether or not it's actionable is, it's up to you. But we want to pay attention to it, maybe use it as an idea generation tool by drilling down on the holdings. And today is Hack. Cybersecurity ETF has a very bullish rating, strong trend above a rising long-term trend line with solid support around the $50 level. Recent personality change, seeing an uptick in relative strength. Bullish stock outperforming bullish. Money flow is oversold within the context of an uptrend. That's interesting to me. If you want to drill down on Hacks holdings and look for individual ideas, I think that makes a ton of sense. But you can kind of see the thought process here. Apologies for getting off track a little bit. I had a little bit of a glitch, couldn't load the industry. Hey, maybe this is a better way to go. I don't know. We'll check it out. Obviously, I'm on social media, so if you thought this was interesting and better than what I normally do, shoot me a message. My DMs are open. Shoot me a message. Say, hey, Dan, I really like that, and I'll continue to incorporate it. I want to give you what you want. And it's trending now. Yesterday's movers and shakers are gainers and losers in the S&P. Lilly trial for an Alzheimer's drug, some good data points, up 11.74%, and BIIB goes along for the ride. WBA caught 2 upgrades. Bullish stock here at Chaikin Analytics. We didn't need those upgrades to tell us. Up 5.5%. Gap 4.5% to the good. No company-specific news there. General Motors. Deutsche Bank published their auto outlook, and GM was mentioned favorably there. Loser side of the board, Twitter and Facebook, the top and bottom names here, as I referenced, the social media space, comm services, social media platforms. Over the weekend, the big news, they de-platformed the president. Investors didn't like that. You can make of it what you will from a social standpoint. But the simple fact of the matter is these are public companies, and the decisions that they make will have implications on their businesses and therefore their stock prices. Maybe longer term, that was a great idea. Maybe it's not. I know that the president was very active on Twitter, and a lot of people may have been on Twitter for that activity, and maybe now they're not. So Dexcom, DXCM, negative pre-announcement, takes 4.5% out of the stock. UHS presented at the JP Morgan Healthcare Conference, which I guess is virtual this year. That's normally a huge event, but virtual this year. And then DXC, no real news there. Let's dig into the charts. Tech, inflection point. There it is, folks. We've been talking about it. I've been waiting for it. We're kind of getting to it now. On a relative basis, XLK relative to the SPY. Now, I've shown this chart for a couple weeks. XLK versus SPY, consolidate, giving maybe this was just giving the 200-day some time to catch up, and we rebound. I don't know, but it'll be pretty easy to tell, right? Either we're going to rebound and then you want to start looking for ideas in big tech, or we're going to break down and you want to continue to avoid them, or, just kind of be out of the way. I think the odds favor up, largely because momentum has never really broken down. Notice that the ratio has never seen an oversold condition on the RSI. That tells us that this trend is strong and that this is probably just a consolidation within the context of a bigger picture uptrend. So you want to look for opportunities and ideas. Remember, last week we showed this chart and we highlighted the semis. This week I throw Hack back on the board. Now, remember, I added Hack earlier. It was a late change, but so you get to see Hack twice. And there it is, trading near a 52-week high as part of the software group that is at an inflection point. So I think that is fairly interesting. I want to pay attention to it. Remember, tech is much more than just Apple. And remember that Facebook, Amazon, Google, Netflix, Twitter are within the framework of the market sectors are not tech. So keep that in mind. Defensives at decade, and in some cases, decades relative lows. Utes, REITs, staples, all continuing lower on a relative basis against the S&P 500. And I mean, these are 10-year charts, right? So we're at a minimum trading at 10-year lows. And in some cases, like utilities, this level here for Utes lines up with levels last seen in 2000. Make of that what you will. The doomsayers will tell you, well, you remember what happened in 2000, the internet bubble burst, and if it made sense for utilities to start to rally from there. And maybe that's the case now. I don't know, but I'm not going to guess at it. The trend is still up. Defensive areas are underperforming. No bid for the havens. Here are treasuries and gold. That's going to wrap us up. Have a great Tuesday, everyone. Take us for a test drive.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.